Hello everyone. Today we're diving into the latest updates around NIO and its sub-brands, with a focus on order numbers, insurance registrations, and what this really means for the company's near-term growth. Over the past few weeks, we've been closely tracking both weekly registrations and the flow of new orders, and once again, the numbers we're seeing are not only encouraging, but also reflective of ongoing demand across NIO's lineup. In this video, I'll break down the figures, talk about potential cannibalization between NIO's main brand and its newer ONVO lineup, and also explain why upcoming launches, especially the ES8, could be the key to a major sales recovery. Stick around until the end because we'll also touch on profitability expectations and why investors might finally start seeing the payoff of NIO's long-term strategy. This is not financial advice. Please do your own research. Now, if you remember the earlier update I shared, we had discussed that NIO's insurance registrations came in at 7,200 units. That number was already better than the 6,100 we had seen the previous week, and at that time I said this was a solid, healthy performance. What makes this more interesting is that across NIO's brands, including the main NIO lineup, ONVO and Firefly, we saw an improvement compared to the prior week. That suggests momentum is building, not just for one or two models, but across the board. Shortly after that report, a new rumor began circulating, pointing to the total number of new orders that NIO had received during the week. Excluding Firefly, the order intake stood at around 7,000 units. However, when Firefly was included in the count, the overall figure reached 8,000 units. That's a very strong showing, and in my view, it confirms that demand for NIO vehicles remains steady despite a competitive market and shifting consumer choices. It's important to note here that these orders don't translate into immediate deliveries. Because of the current waiting times, most customers who placed their orders last week will only start receiving their cars from September onward. The waiting period for the main NIO brand vehicles is still around 2 to 4 weeks. For the ONVO L90, the backlog is even longer, 8 to 10 weeks, while the ONVO L60 and Firefly models are averaging around 2 to 4 weeks as well. This essentially means that the strong orders we're discussing today will start showing up in September's delivery numbers, and that's actually a good sign. It shows that the pipeline is healthy and demand is carrying forward. Now, when we look at NIO's main brand models, there's no denying that deliveries haven't been as strong as they were last year. But that doesn't mean they're collapsing. What seems to be happening is some level of cannibalization between NIO's main lineup and its ONVO sub-brand. In other words, some customers who might have chosen a NIO mainline model in the past are now opting for ONVO instead. On the surface, that sounds like a negative. But here's the bigger picture. Regardless of which brand consumers choose, the revenue still flows back to NIO. That means the company isn't losing those customers entirely, it's just spreading them across different sub-brands. That said, the main NIO brand still plays a critical role because it delivers stronger gross margins compared to the sub-brands. That's why it's so important for NIO to keep main brand deliveries at healthy levels, ideally above 20,000 units per month. This is where the upcoming ES8 launch becomes very relevant. The pre-launch event is scheduled for August 21st, with the official launch coming in September during NIO Day. NIO has repeatedly hinted that the ES8 will play a crucial role in boosting sales, and when we compare it to ONVO models, especially the L90, we can already see why. From the interior to the overall build, the ES8 clearly offers premium features that set it apart. Even though ONVO L90 has been a big success and generated a wave of excitement, the ES8's design, technology, and luxury factor make it stand out as the superior choice for many customers. And that could help NIO regain momentum with its mainline brand, driving sales back toward that 20,000 threshold we've been discussing. Now let's look at the weekly delivery performance again. NIO's insurance registrations were 7,200 for the week, and while that's solid, it also highlights that the company still has work to do if it wants to match order numbers with deliveries. Take the ONVO L90 as an example. It already has close to 60,000 orders in the pipeline, but weekly registrations can't fully reflect that yet. Meanwhile, the ONVO L60 continues to perform steadily. In fact, in the most recent week, it registered over 1,400 units, which is consistent with what we've seen in past months. That tells us there's no internal competition or cannibalization between the L60 and L90. They're both appealing to different types of buyers and maintaining strength. Where we do see an impact is between ONVO models and the NIO ES8, which historically has been one of NIO's best-selling vehicles. Its sales have softened, likely because some customers are shifting toward the ONVO lineup. But again, this isn't catastrophic for NIO as a company. It's more about the distribution of sales within the ecosystem, and ultimately all of it contributes to NIO's revenue stream. If we step back and compare the current orders with previous weeks, 2 weeks ago NIO logged around 10K orders. Last week it was 8K. While that's a decline, it's still a robust figure. Remember, these aren't small numbers. An 8K order week shows that demand remains consistent and that customers continue to place trust in NIO's products. And when we add in the broader context, this becomes even more exciting. NIO has successfully rolled out 2 sub-brands. It's also producing its own autonomous driving chip, which is already powering the main brand vehicles. And management has been consistent in saying that profitability is coming by Q4 of this year. That's been reiterated recently by NIO's CEO, and it's a key milestone that many investors are waiting for. So, when you take into account the steady orders, the product launches ahead, and the long-term strategy that's already in motion, it's clear that NIO is making meaningful progress towards sustainable growth. To wrap this up, NIO's latest numbers show 7,200 insurance registrations for the week and 8K total orders when including Firefly. Wait times across models suggest these orders will show up in deliveries starting September, which points to healthy forward demand. While some cannibalization is happening between the main brand and ONVO, all sales still flow back to NIO, keeping the revenue within the company. The main brand remains crucial for margins, and the upcoming ES8 launch could help drive sales back toward the 20K unit level. ONVO models like the L60 and L90 continue to perform strongly, and with over 60K L90 orders pending, the potential upside is clear. Combine this with NIO's sub-brand expansion, its in-house chip development, and management's confidence about hitting profitability in Q4, and the outlook is looking increasingly positive. So, tell me what you think. Do you believe NIO's ES8 launch will revive main brand sales? Or do you think ONVO will continue to dominate customer interest? Drop your thoughts in the comments below. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.